Welcome back to Alpha Recap. Markets were closed for Memorial Day, but headlines did not take the day off. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone! Lots to unpack from the long weekend. Electrification, AI debates, crypto moves, plus some sobering safety and regulatory stories. Ready to dig in?
Absolutely. Let's start with the big picture framing. We had three dominant cross-cutting themes over the weekend: accelerated electrification, continued AI infrastructure questions, and a fresh leg of crypto enthusiasm. But there were offsetting risks too: safety incidents, regulatory pressure, and public health headlines. So it felt like a tale of two markets.
Right, a lot of momentum in some corners and real caution in others. And remember, everything we're talking about happened before the holiday close. So we're recapping what moved the narrative while markets were off.
Let's pull apart that first theme: electrification. California announced a $1 billion electric truck rebate over the weekend, and that tied into a large corporate order. Watt EV placed a 370-unit order for Tesla semis.
That combination was pretty powerful. Policy plus procurement. That's demand visibility. When a state puts big money on the table and fleets follow, it shortens the time between prototype and scale.
And the market reaction reflected that. Utilities, charging infrastructure suppliers, and EV-related industrials got a tailwind from that story.
So, what really stands out here is the correlation point. If EV adoption accelerates, it's not just the vehicle makers who benefit. We're talking copper demand, battery inputs, grid upgrades, a multi-sector lift.
Exactly. Electrification is functioning more like an investment axis now. A single policy move can ripple into materials, utilities, and industrials at the same time.
And don't forget the solar side. There was a reported cell efficiency improvement of about 27% circulating over the weekend. That kind of technical step change, if scalable, really moves project math.
Right, a roughly 27% bump in cell efficiency improves levelized cost of energy assumptions, which in turn can accelerate deployments if manufacturers can make it at scale.
Which is the key caveat. Breakthroughs matter only if they translate to gigawatt-scale manufacturing and cost-effective modules.
And that brings us to a recurring theme: downstream processing and supply chain capacity. The commentary over the weekend emphasized that winning the race for critical minerals now depends on processing and refinement, not just mining.
Yeah, the industry keeps moving downstream. If you just dig ore but can't process it domestically, the timeline lengthens and capital needs spike. That was a clear cross-sector warning for materials and industrials.
Switching gears, AI. The weekend narrative showed the classic double-headed nature of the AI story: strong innovation headlines and device upgrades on one side, and cost and regulatory questions on the other.
Exactly. So, yeah, we saw momentum in parts of tech tied to AI, but utilities and other regulated industries raised concerns about runaway AI-related costs for grid and customer software projects.
That's a practical point. Analysts note that AI-related capex can create winners in semiconductors and data center operators, while at the same time pressuring near-term margins for firms that have to manage rate-based scrutiny or tight budgets.
Right, and I mean, when you step back and look at this, the decision to invest in AI is both strategic and political for utilities and regulated firms. Rate hearings and customer benefits become part of the calculus.
Let's talk crypto. That was probably the loudest weekend story for price action. Bitcoin topped about $77,000 over the break, and a number of altcoins rallied. NEAR was up roughly 15%.
That move in NEAR was surprising to a lot of people. Cross-chain volume and wallet support headlines really drove token-specific momentum.
And there was infrastructure news beyond just prices. For instance, Tether got a favorable nod from Georgia's central bank, and wallet and custody developments were cited as drivers. That infrastructure loop tends to feed adoption narratives.
But the weekend story was nuanced. Analysts pointed out ETF outflows in parts of the crypto complex, and persistent malware or supply chain risks. So while infrastructure adoption was positive, security and flow dynamics still tempered the optimism.
Which is to say, stronger on-chain activity and clearer regulatory signals can buoy related fintech and custody plays. But a security incident could reverse sentiment quickly.
Totally. And we had some sobering headlines too. The materials and mining space was hit by a tragic coal mine blast in Shaanxi province, which prompted criminal probes and operational suspensions.
That was serious. Incidents like that trigger tighter regulatory scrutiny, potential supply constraints, and higher capex and insurance costs for operators. Markets reacted by marking up risk in materials.
Yeah, it's a reminder that operational and safety risk is real and can quickly change project economics and timelines.
Cannabis also had a tough weekend. Federal testing proposals and state potency audits were in the headlines, and union activity added another layer of cost and operational uncertainty.
That combination increases compliance burdens and could raise operating costs. Analysts noted that policy changes on testing frequency or potency rules can directly affect margins and liquidity in that sector.
Healthcare was mixed. On the positive side, Eli Lilly reported a gene edit dose that reduced cholesterol by 62%. Clinically material data that sparked a lot of attention.
Honestly, I was a bit surprised by the size of that headline. A 62% reduction is big. But the market also flagged the usual caution. One readout doesn't equal a clear path to approval. Larger and longer studies are needed.
And on the risk side, suspected Ebola cases in the Democratic Republic of Congo raised public health uncertainty that could weigh on certain biotech and service names if the outbreak expanded.
So, mixed results within healthcare. A major therapy breakthrough on one hand, and potential epidemiological risk on the other.
Let's pause for a couple of quick reactions.
Big move in crypto for sure.
Policy drove electrification headlines.
Regulation remains a real governor.
Okay, time for some plain English takeaways and what to watch next. We want to keep this actionable for informational purposes only, and highlight the data points that could flip sentiment when markets reopened.
First, monitor policy calendars and regulatory filings. Key items include federal cannabis testing timelines, any streaming levy decisions in Canada, China mining safety updates, and central bank guidance on stablecoins.
Second, watch electrification read-throughs closely. Big fleet orders, state and federal incentives, charging station rollouts, and semiconductor supply for EVs. One large procurement or incentive can accelerate a whole supply chain.
Third, track solar commercialization milestones. That 27% efficiency bump sounds exciting, but the real question is whether it scales from pilot to gigawatt production, and how developers update CapEx guidance.
Fourth, in biotech, pay attention to follow-up cohorts and safety readouts after the Eli Lilly gene edit result. Single trial excitement needs replication before it changes longer-term R&D allocations.
Fifth, with crypto, keep an eye on wallet and custody announcements. Jurisdictional opinions, like that nod in Georgia toward Tether, and any security incidents. Infrastructure progress supports adoption, but security shocks can reverse flows fast.
And finally, remain attentive to labor and cost pressures. Union activity in cannabis and media, shipping surcharges affecting retail, and the ongoing debate about AI-related cost inflation in regulated industries.
Risk management notes to bring forward. Diversification and liquidity matter. Headline-driven volatility from geopolitical events or mining accidents can compress liquidity. Also, many of these technical innovations need long commercialization windows, so short-term market reactions may be noisy.
Let's hit a few sector-specific things folks should look for early this week once trading resumed. Crypto. Watch price reaction to the weekend infrastructure news and any regulatory statements from major jurisdictions.
Consumer and retail. Follow up on retailer commentary about inventories, shipping cost pass-throughs, and whether promotional activity continued into the holiday. That will help clarify whether resilience was temporary.
Utilities and EV suppliers. Any confirmations of procurement, charging infrastructure bids, or implementation details about California's rebate program.
Materials and mining. Updates on the Shanxi investigation, downstream processing project approvals, and any rare earth policy moves from major jurisdictions.
Healthcare. Watch for additional cohorts or safety data from gene edit programs and any World Health Organization or national updates on Ebola surveillance in the DR Congo.
Cannabis. Keep an eye on federal testing rule publication timelines and state-level potency audit outcomes. Those administrative moves can change operating costs quickly.
Before we close, a few final observations. The weekend left markets in constructive tension. There were clear secular themes: electrification, AI, and crypto infrastructure. But policy, safety, and public health risks acted as governors.
Sentiment heading into the next session looked neutral overall. Theme-specific rallies were balanced by pockets of heightened policy and operational risk. So it was very headline-driven.
In short, data suggested momentum in electrification and parts of tech and crypto, while regulatory and safety headlines created localized pressure in materials, cannabis, and parts of healthcare.
If you want to dig deeper into any of these topics, we're happy to break them down. As always, this is informational. Analysts note trends and data, not personalized investment advice.
Key takeaways. 1. Policy and large orders are accelerating electrification narratives. 2. AI is both a growth driver and a near-term cost debate. 3. Crypto infrastructure momentum was real, but security and flow dynamics still matter.
And remember, regulatory moves and safety incidents have stayed power. They don't just make headlines. They can change cost structures and timelines for projects across sectors.
Thanks for joining us for this long weekend recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Catch you next time. Have a great week, everyone.